My name is Sheila Long, and I'm with Old Republic Exchange. I'm here locally in Arizona as a regional sales executive. My role is to really handhold your clients as well as any realtors about understanding the guidelines of the 1031 exchange. My focus is making sure that your clients understand all the strict timelines as well as some of the rules, what they can and can't do. So keep me in mind if you have a client that's in need. Keep me in mind if you're on the buyer side and you just want to sound like you know what you're talking about. I am one of 8 national educators for Old Republic Exchange. So I run around and teach this course about 1031, and I'd love to make you more knowledgeable. With that being said, I'm going to introduce my guests, 2 wonderful agents that I know here, Jim Caston and Chris Norton. Thank you so much for joining us. We are going to be talking about Metro Phoenix apartment market. And this next 45 minutes will be a ton of information. So again, either put your questions in chat, we'll address those, or feel free to jump in and chat with us. With that being said, just really briefly, I'm getting ready to pass it over to our first speaker, but I want to let you know who it is you're listening to if you don't already know them. All right, Jim Caston's going to start us off. And he was formerly with Remax Commercial Investment locally here in Scottsdale, and before he formed the Caston Long apartment team, which was actually recognized internationally. Now he is part of Metro Phoenix Commercial, which he started with his co-partner, Chris Norton. Chris Norton is a full-time commercial agent who lives in the downtown area of Phoenix and actually understands the market. So you're really going to get a great understanding of what he does and focuses on. And with that being said, thank you again for joining us, both Jim and Chris, and I want to pass it off to Jim. So Chris, go ahead and take over the slides.
All right, good morning, everybody. So this is Jim Caston. So Sheila, thank you for the opportunity to be part of Old Republic Exchange. Great company. I've worked with Old Republic for many years. We have lots of data to cover, and a lot of my data comes either from CoStar or Yardi Matrix. And if you don't know those, both those are great databases with tons of information, quality stuff. They do research across the United States. And I'll try to, on each slide, identify if the data is from CoStar or Yardi. As Sheila said, if you would hold your questions till the end, we've got about 45 slides to go through, and we're going to get through this in about 30 minutes, and then we'll have 10 minutes for some Q&A. Good. So the slide I'm looking at, so Chris is in control of the slides, and I'm going to go next for each time that I want to go through that. So we're going to start with this. This is the outline that we're going to go through, and Chris, let's go to the next slide and let's talk about what's driving the market. So apartments are driven, occupancy, vacancy, rental growth, it's driven by population. Everything else is secondary or supports population. So we have a lot of population coming into our area right now. And a couple things to highlight. We are a semiconductor hub. That's important for a lot of the IT migration of companies coming this way. And also we've got a very strong workforce. A lot of that is responsible from Michael Crow with ASU, who is working hand in hand with a number of companies, as well as NAU, GCU, U of A, and the Maricopa Community Colleges is 200,000 students currently in the Maricopa Community Colleges. So next slide. So population growth. Picture of the United States, you can see the darker colors are the ones that have had significant population growth in the last 12 months. Idaho beat us out. It's the only one. They had 2.1%, Arizona at 1.8%. Next. So this is a great slide, you guys, and you'll get a copy of these slides at the end of the presentation or tomorrow when for everybody that's registered. But this is happening across the United States. People are dumping out of New York, and you've seen it on the TV all the time. They're dumping out of California. We're benefiting from a lot of folks coming from California. Next. So population growth, depending on the different data sources that you look at, our population for Metro Phoenix, about 5 million people, 45,000 give or take per year. That's important. Remember, that's that number, 75,000. Essentially, Maricopa County is Metro Phoenix, and it's the fastest growing county in the United States, population-wise. Next. One of the things that Phoenix used to be known for, um, cotton, climate, copper, citrus. I think we were the 3 C's or the 4 C's or something like that. That eventually then graduated to, we were more of a construction state. We had a lot of building going on, but now we are very diversified. Chris, next. So here's a nice pie chart, and when you get the I can send this any of these slides to people that are in the regular format. This is great. If you just plug in the new percentages as they change, you'll have a nice pie chart to give in your presentations. We're led by trade, transportation, utilities, second by education, health, financial services, and then leisure, hospitality. The point is here, we are very diversified so we can handle any changes. Next. New construction. Boy, you drive around anywhere and you see lots of sticks being put up, and it's like, wow, this is amazing. So it's interesting here to see. So my chart starts at 2011, and you see that was when, coming right out of the Depression, and then we started to gain momentum, and as the vacancies dropped, vacancies on the right hand side, as the vacancies dropped, we started to increase the number of new units coming online. Next. So here's our pipeline. Pretty amazing. 28,000 units currently under construction. 28,000. 24,000 planned, 19,000 prospective, 72,000 total in the pipeline. Not all the prospective, not all these will get built, but lots of them. Next. This is interesting. So, and this is gonna get back to these numbers. Last year, 8,800 units completed. Projected forecast for this year, more than 17,000. That's a lot. Remember that number again. Next. So when we first started, when the construction boom started 4, 5, 6, 8 years ago, it was mostly in the main cities. Phoenix, Tempe, Scottsdale, Mesa, Chandler, Gilbert. What's happening now is a lot of the construction still in those cities, in the urban areas, but we're going out to the suburbs, and that's important as people move from the urban areas out to the suburbs. The rents are going up. So then apartments are able to be built, and part of that is from people being able to work at home. Next slide. So occupancy, hugely strong, amazingly strong. Our vacancy, very, very low. This is driving our market. And essentially, if you have 4.3% vacancy, it's about 1.3 days out of a month. So it's really, the vacancy is really just a time for somebody to leave an apartment, get it cleaned up, and for somebody else to move back in. Next. So let me stay a minute on this slide. So this is vacancy rates. The US is in yellow. Phoenix collectively is in green. You see this vertical line, the hatched line. So this is CoStar data. And what CoStar is projecting is that our vacancy, so let's take the green line, the vacancy is going to start increasing going forward, whereas the U.S. vacancy is going to tail off, is going to decrease. So they're going to get higher occupancy going forward. CoStar data, I'm not sure I believe it, but that's what that slide shows. Next. Last year, we had a little hiccup in everything, especially in the second quarter with the pandemic. But over the last 4 quarters, we are now at 7% rent growth. 7% is huge, huge. And if properties go up 7% in rent and the expenses stay the same, you've just gained huge value. So, next slide. Okay. This is Yardi matrix data. This is last 4 years. And if you can see the little dip towards the right-hand side, the different colors of the different types of units, from working class to tenant by discretionary type stuff. So a little hiccup in Q2 of last year, but otherwise always going up. Next slide. This is a 10-year projection. Again, historic levels. We've had 10 years of consistent positive rent growth. Real estate is cyclic. Be careful of this. Remember this. This is one of these, be careful going forward. Next slide. Going back to the 7% rental rate compared to the United States. The only places, and they consistently beat us by a little bit. The Inland Empire and Sacramento tend to be a little stronger than we are. They have been for a number of years, but we are right up there. The first chart, on the one on the left, is all assets. The second one is discretionary, and the third one is necessity. But we are right up there, either second or third, based on across the entire United States. Pretty amazing. Next. So this is Yardi's projection, and it's a 2 to 5 year forecast. That's in green, and then a 10-year. Yardi is more optimistic, I think, than CoStar is. As you can see, one of the rows near the bottom, they are projecting year-over-year rent growth 3 to 4, 5% every year. Maybe not the 7%, but that's still very strong. Occupancy across the board, I see 94, 95% for 10 years. So these guys, they look at the whole shebang and they're saying we're on track to continue to be very strong apartment market. Next. Chris? Yeah, thanks. So one of the questions is, are we overbuilding? And I have a little simple chart. If you can follow this with me, all the numbers are wrong, but they're all ballpark correct. So 77,000, give or take, new residents per year. I think that's actually higher, but that's the census. 30% people live in apartments. That's probably low, but it's conservative. So you get 20-some thousand people that need to be in apartments. If you have 2 persons per apartment, that's 11,000 new units needed per year. 11,000. We've been building 9,000-ish per year the last few years. So we're not gaining any strength in absorption. However, this year, again, here's that 17,000 number. If we complete 17,000 new units and we only need 11 or 12,000, we're going to start increasing our vacancies. So I think vacancies will start increasing. These are just my thoughts, but it's based on numbers. Next. Chris. So history of apartment sales. Fairly consistent the last 4 or 5 years, 70 to 80-ish units, projects being completed and sold per year or per quarter. So it's interesting, very consistent data. So next, and this is a little more complicated slide. So here's the sales volume, and this is based on dollars, but it reflects number of units sold or number of projects sold as well. You'll see the dip in the orange bars there. You'll see the dip in the second quarter of last year. That was the COVID. And then last quarter of last year, we were a monster gain, which gave us a similar amount of total sales per year than we have normally averaged. What's interesting here in the squiggly lines, green and blue, the green is the US, the blue is Phoenix. So we are below in price per square foot against the US. That gives us room to grow. An important point, we still have room to grow, even though our values are going up steadily. Next. Cap rates. So this is CoStar data. Cap rates have been coming down. And that these guys are, in fact, I was saying probably cap rates around the lower end is 5. If you look at the larger institutional sales, they really are down in the mid 4s. What the projection here from CoStar is that we are bottoming out in cap rates or values, and that CoStar is projecting across the board that we will stay at the between 4 and 5% here for the next few years. Next. So I like to throw this slide out. So our cap rate's important. Yes and no. The yes is if you have a stabilized product, or you've repositioned an asset, or you've got a new construction and you've got good financials, you're stabilized, you're not going to change much. That's when you sell things by cap rate. But I don't mind buying something at a 0 cap. Say it's a vacant property, but it could be repositioned to provide lots of value. I'm happy with, I don't even care what the cap rate is. I want to look at the future value. And a lot of projects, when we underwrite value for owners, we look at the projected value and back from that into what an owner could buy it for and still make money. And that's then the new value of the property. It doesn't make any difference what its existing cap rate is. So now I'm going to turn this over to my partner, Chris Norton, who, again, as Sheila said, lives in downtown, lives and breathes downtown, goes for restaurants down there, talks to the people, is part of the community, and he's got great insight about what's going on in downtown Phoenix and where you might find opportunities. You got it, Chris.
Thank you, Jim. So as Jim said, I am a downtown resident. I do participate in some organizations that are about making a better downtown beyond just real estate. So that allows me some more detailed insight, not just to what's coming down the real estate pipeline, but where the city is headed in general. So I'm here to talk about downtown. Yes, there's big crowds in these pictures and there's a lot of vibrancy. I do fully expect it to return post-pandemic. I think that not only is it a place where people want to work, it's where they want to live, play, eat, dine, and shop. So where exactly is downtown? Well, the current designated redevelopment area by the city of Phoenix is what most people consider to be downtown. From north to south, it extends from McDowell Road, just north of the I-10, all the way down to the warehouse district at Grant Street. And then it's between the 7s, the 7th Ave to 7th Street. We're currently the 5th largest city in the country, and that's going to come up in an important note later. So what's driving the downtown development? Let's first talk about what's happening very briefly. The city of Phoenix recently noted 14 cranes in the sky at the same time. That is the most the city has ever seen in its history. It's staggering. What's driving all of it? It comes down basically to the partnership that was started with the city of Phoenix and ASU that kickstarted the redevelopment, but it's no longer the single most driving force. In a nutshell, it comes down to jobs, jobs, and more jobs. There are 400 tech companies and startups in central Phoenix. Most of those are in downtown. We've been ranked #1 for entrepreneurial activity. Companies and people are leaving Silicon Valley. They're coming to Phoenix for the climate. They're coming to Phoenix for the skilled and available workforce, and they're coming for the entrepreneurial incubators that are downtown. Education, ASU, Arizona State University, has 12,000 students just in the downtown campus alone. Thunderbird School of Global Management, U of A, College of Medicine, Cancer Center for Dignity Health. All of these are incubators for skilled talent and workforce. The Biomed campus is a huge economic engine downtown as well. It's a partnership between 2 universities in the city of Phoenix. It comprises 30 acres, has attracted $3.25 billion in investments since 2018. It's added 5 million square feet since 2018, with 1 million more to come. It's created 8,000 jobs. And as a side note, between the Biomed campus and Banner Health's campus at 12th Street and McDowell, that's over 12,000 jobs. Population. Jim touched upon this earlier, about 75 to 85,000 annually, Maricopa net inbound migration. Well, about 30,000, about a third of that ends up in Phoenix. And on average, the Valley, this is the #1 gain, in numeric growth over the last 10 years, according to the Census Bureau. So we're attracting people like crazy. New apartment construction. I've kind of taken this map off of our website, metrophoenixcommercial.com. You can get the slides later in a PDF and click on that link. This highlights what the active projects are, whether they're under construction, planned, or prospective. Basically, you can click on these pins and see the details like the developer's name, the property, if it's an affordable, partially affordable, or market rate. You can see the status of where it is. So under construction generally means that a permit has been issued. Planned means the developer's begun the planning phase. Prospective means the developers generally announce their intention to build something, but there's no planning, and not everything that's prospective comes to fruition. So let's break down the numbers a little bit. With something to note is that about 8,500 units were built between 2000 and the spring of 2021. If you look at this chart, you can see there's more than half of that in the pipeline today. And this is just projects that have 50 units and more. So astute observers might note that the building on the right I used to illustrate the slide is actually not an apartment building. I needed something tall, vertical that would fill the slide. This is actually a ASU campus expansion tower for classrooms and labs and whatnot. I'm going to move on to where you might find opportunities as an investor or a developer to capitalize on this huge economic engine. The city of Phoenix has defined some redevelopment areas. And so what's a redevelopment area? It's a designation that allows the city to adopt an area plan, use state law tools to remediate slum or blighted conditions, and it allows for acquisition, clearance, reconstruction, rehabilitation for future use. Basically, it empowers the city to use tools to attract investments, development, and change areas. The blue region is the downtown Phoenix. And the area I want to talk about is going to be over here next. This is coming from the City of Phoenix Community and Economic Development. You can go to their website for more and to learn more about RDAs. Again, this area, I'm going to focus on the Booker T. Washington and the East Lake Park areas. Generally speaking, this area down here and this area up here are opportunities for development. However, demographics don't currently aren't able to yield the rents needed to justify today's materials and labor costs for construction. It's just making projects not pencil. This area over here is largely light industrial. It's not really meant to be a multifamily area of interest. And this area here is considered to be too far off the beaten path for most developers to find interest. However, it is a defined area. So where is development happening? It's pushing down Van Buren into these two areas, into Booker T. Washington and East Lake Park. I would also call out, there's an area between 16th Street and the I-10, and then from the I-10 again, south to Van Buren. The city of Phoenix owns a lot of that land and has actively partnered with developers to create affordable housing projects. There's a number of properties up there that could be repositioned. It's an area you might find interest in. If you want to learn more about what that means and what city resources might be available to you, contact Sherry Boucher. Her information is on the lower left corner of this slide and will be in the handout later. So let's talk about something that drives Phoenix. A lot of people commute into Phoenix. They don't live in the downtown. So where might it be another opportunity to capitalize on the economic engine that is downtown? Clearly, it's the light rail. Anything that you can find along the light rail corridor that could be repositioned or developed and built is going to feed into that economic engine. There is about 45,000 riders per day that rely on the light rail each and every day. So, and it's just growing exponentially. It's exceeded the projections by the city of Phoenix many times over in the last several years. So if you're a developer and you want to actually build something or reposition, scrape and build something, it's worth noting there's something called the Transit Overlay District. This allows developer benefits. It's to promote density and walkability, to encourage transit usage. So the city of Phoenix has loosened development requirements for projects near the light rail. The goal is to create a comfortable 5 to 10 minute walk from a light rail station to retail, office, or housing. Transit-oriented development tries to also make a comfortable environment for pedestrians and bicyclists to encourage people to walk and bike from transit stations. The defined benefits really come down to significantly reduced setbacks. They allow for a reduced parking ratio, a higher density, but they do have some requirements to meet those goals. So such as adding shade structures or awnings or arcades to allow people to be pedestrian friendly. Let's go into a little bit more details about what's on the horizon that some developers are already paying a lot of attention to. And it's for 2024. There is a extension of light rail that in the city of Phoenix in 2016 moved up the timeline. So instead of having this extension go live for operations in 2034, they shortened it by about 10 years and said, we want this to happen in 2023. The reason was simple: money. The project, this extension qualified for federal matching grant monies. And so that project got off with a bang. It's expected to open for operations in 2024. The green line is the line headed south from basically Cityscape all the way down to Baseline. And up in the upper right corner, this is going to be a new hub. There will be now 2 lines of light rail. And if you want to come from Mesa and head south, you'll get off at this hub and get on the other light rail to go south. So that's what the hub is about. The hub is already very much under construction. The hub literally circles around the Cityscape property and project. So I would argue that there's a lot of opportunity along the south extension to either buy vacant land, reposition properties within a short walk. Just keep aware that many of the residents in South Phoenix are lower to lower middle income and are not going to be your people to buy into an apartment that's the next luxury high rise. But I do believe there's a tremendous need and opportunity for workforce housing. And I also believe that with the development will come changes, including an increase in property values over time. Trades have already begun there, but there's still plenty of runway. I've covered a lot, and I have a lot more I could share, but I'd like to keep this short in the interest of time. And if anybody would like to reach me, they can do so in my contact info later. And I'll throw this back to you, Jim.
Great, Chris. And you can get an idea that Chris really knows downtown Phoenix. And again, as Chris said, you know, you've got our emails. Send us questions that we can't answer yet today. So I've got about 2 more minutes, and then we'll turn over to Q&A for everybody. Next, Chris, let's go through these pretty quick. We're getting this is from the Cromford report. It's the housing market is getting a little bit more stabilized. We're up from like 6,000 inventory to 9,000. I see that Todd Menard from West USA is on here, and he could probably acknowledge that. By the way, so Metro Phoenix Commercial works under West USA in their commercial division, and they are a great support company for us. We really enjoy the association and the work we're doing with them. Next slide. Housing prices are going up, so that's good for apartment owners because apartment people can't afford to get into houses, so they're staying as apartment folks. Next. So one of the things to be concerned about for Arizona, we've got a Prop 208, which is going to be a wealth tax that might keep a number of companies and people from relocating here. I hear that from a lot of folks. We've got a lot of people that have come in from California. We have to be careful about more tenant-friendly laws being imposed on apartment owners. Increased capital gains tax. There you go, Sheila. That'll help your 1031 exchange stuff. We've got a lot of folks coming across the border. I don't know the impact that will have in Arizona. And across the board, across the United States, affordable housing is always an issue. Next slide. And also, Arizona's economy is related to the United States. So there's some pros and cons of what's going on across the United States. I'll leave that for people to read when we get the slides back. I want to keep going. Next slide. So buyer opportunities, repositioning Class C assets into B areas. As Chris mentioned, maybe buying or repositioning assets along the light rail and future extensions. Previously passed over areas. I use Sunny Slope as a great example. That started to come to life. We've ignored that for a number of years, and now there's some new construction going on in the area. And of course, any properties that are below market. Next. So the forecast, I think the population will continue to grow. Rental rates will continue to increase. Occupancy will remain strong. Sales activity remains strong. Cap rates bottoming now. I don't think they go much lower. We've got a wave of new construction this year forecast, so be careful of that. That might impact our occupancy. If occupancy goes down, rental rates will go down as well. And then I'm going to do an article with the Angela Gonzalez here in the next couple of weeks on the single family homes being built for rentals. Angela's with the Phoenix Business Journal. And that's an increase. We'll have about 2,000 houses built completed this year. Not a huge amount, but it's a growing discipline. A lot of big companies, REITs doing that work. Next. So here's some useful resources for you with CoStar, Yardi, Vista. If you don't know Vista, Keith Thompson does a great job with yesterday's closings. He gets data today and other resources there. American Title, Helena Donahue they do a great job of helping investors find properties. So reach out to Helena. Next. Again, here's our contact information if you want to reach us. Next slide, last slide. Is cool. This is one of those hababs coming in through the downtown Phoenix. So beware of the headwinds. All right, that's our presentation, guys. Let's turn it over for Q&A and see if we can help you with some answers.
Great. Okay. Thanks, Jim and Chris. That was really so much information. Really want to open it up now. Feel free to unmute and ask your questions, or if you're not comfortable in this format, you can always put your information in chat and I can read those questions out. So let me pause and let us open up. Okay, great. Well, it doesn't look like we have any questions.
Let me throw out a question that should be asked, and we get
Okay.
this from other things. Guys, so if you're an agent and you've got buyers, and everybody's got buyers looking for multifamily, it's what's going on these days. How do you find product? And it's really, really tough. Now, if you're looking for small things, the MLS is a good source. But for 20 units or more, unless you've had some communication with the apartment owner in the past, that apartment owner is getting contacted by all the other agents in town on a regular basis. Probably apartment owners get 1 or 2 calls at least a week. So if you're making a one-off call or sending a one-off letter, it's really tough. So you're probably going to have to try to work with some of the existing agents that are apartment agents that have some sort of a funnel of people that they know that are willing to sell. So it's tough if you're trying to do it on your own. We're here to help if somebody's needing something. We're happy to help them.
Thank you, Jim. Well, I do want to make a comment because you mentioned 1031. So, right, that's my area of specialty. And I'm getting the question quite a bit that everyone's asking, what's going to happen with the new administration, the 1031 exchange? And as you all know, that it was brought up when our current president was seeking election, and he mentioned using the 1031 exchange as a potential source of revenue to support programs. And for us as a QI, as a qualified intermediary, right now we think it's a non-issue. And as the reason why, we can see what happens. But we feel that every incoming president, once they are elected, they find there's a significant negative impact on the economy if they were to take away this 1031 exchange. So at this point, it is our position to say there are far too many unknowns. Do I think personally, if I had a crystal ball, would there be a cap on it? Maybe. Would our hotel owners that own 60 million in hotels go and sell and buy 9 single families for their stockholders? Could they be capped? Yes. But are the rest of us, smaller guys under 5 million, are we going to be affected? I don't know. We'll see. But I do want to point that out. So Jim, thanks so much for asking that. We'll see what changes happen. And again, if you guys want to ask any questions, please feel free to unmute. Well, great. Okay. Can you do me a favor, Chris, and slide over to my slide and I can wrap us up?
Your slide, I don't believe is in my deck.
Oh, it's
so
not?
I'm going to unshare.
Okay. And I will screen share and then I will close this up. Here we go. Let's see if I can do this from where we're at. Hang on a second here. All right. Can you see me? Can you see my slide, Chris?
I see you. I don't see a slide yet.
Oh, you don't? Okay. Well, anyways, you guys know who I am because you got my information. Let's go ahead and try that again. But just want to let you guys see it. You see it? Okay, great. Hang on.
Yeah,
right
there you go.
Okay, great. Want to say thank you guys for joining us. We're going to stick around for anyone that wants to stay here and ask questions. If you're better with this sort of format with less people, feel free to stay on. Chris and Jim and I will be here for a few more minutes while people shut down. But thank you again. My name is Sheila Long. I am the regional sales executive. For any of your 1031 exchange questions, if you'd love to be a speaker on one of my webinars, let me know. I'm really trying to focus on commercial as well, giving you guys more education anything we can do to help. Thank you again for joining and have a wonderful week.
Thank you, Sheila.